Hey there and happy Friday. I know it's been a while, but I thought I'd do a quick little video to say hi. I'm still here, still watching the markets. And as you know, there's been a lot of ups and downs, super volatility, which is really actually interesting to watch because it gives you a lot of information about the stocks and where they might go should there be a recession or should there be a real market crash, which, I really do think is still coming. Although analysts are kind of split 50-50, as they say, because they kind of look for predictability. And right now, the Fed in the US is being pretty predictable. They raised interest rates by 0.5%. And not more. If they raise interest rates faster, that's going to send more quakes into the market. And let's face it, the situation in China is nobody's talking about, but it's scary. If all the Chinese workers are locked in their homes and not working, this is going to affect a lot of companies. And already we've seen Apple come down because they have manufacturing in China. There's a whole world of hurt coming. And that's a great opportunity to buy stocks, especially if you're long-term investors like myself. So I want to talk about a couple of stocks and how I'm preparing for all of this volatility and how I have been using the market volatility to basically make sure that I don't lose. It's very defensive right now. All of my plays are very defensive. I bought back into some stocks that had hit lows and just sort of like these little mini quakes or these mini crashes. And I also bought into some dividend stocks that hit some nice lows so that I can keep collecting a monthly income. Most of my money has stayed kind of on the side, still waiting. I'm not going all in on anything. However, I have set my price targets for various different stocks, and I've also set some really defensive plays, so stop limits. Because if there's a crash coming or if something unexpected happens in the next couple of months, I want to make sure that I'm not losing my capital. People always say the stock market's too risky, I can't afford to lose money. That's true. But that's what a stop limit is for. When you own a stock and you think, oh, I might have bought a little too high, or I might want to make sure that I don't get, too low, then, or preserve your capital, then set a stop limit. That's what I did in certain stocks because I know that they're volatile or whatever. I set a stop limit and I set a buy limit to buy back into that stock at a lower price. Because I want to hold on to my stocks long term, the lower the price that I can get it at, the better I am for long term. So, yeah. Anyway, let's talk about one in particular, and I'll show you what I mean. So let's talk about Enbridge. I mean, this is a staple in most Canadians' stock portfolio. This is considered sort of one of the better companies that you can invest in because energy is always going to be there and is always going to be needed. It does go up and down seasonally, but it offers a 5.85% yield, which is pretty decent, and the stock tends to go up. So if you look here, the 52-week high for Enbridge, that's over the last year, 59.09, and the 52-week low is 45.76. So I had bought Enbridge previously at, I want to say around in the 48.50. And when the last real sort of major crash happened, I had a stop limit sell off my Enbridge so that I could then buy it back. And I bought it back at 45.51. Now I only have 10 shares of Enbridge because most of my money actually goes into ENS or eSplit Corp. And that eSplit is the one that offers a higher dividend, but it is a fund that tracks Enbridge exactly. They basically buy and sell shares of Enbridge. So I like the dividend that I get from eSplit, but I do hold, I only put $500 into ENB right now. So as you can see, my average price is 45.51, which is pretty darn close to the 52-week low of 45.76. So I managed to sell off, make sure I didn't lose. That's what a stop limit is for, and then buy it back at a 52-week low. Now, I want to tell you that I did not. I had thought about putting a stop limit sell in here to make sure that I don't lose my, small investment in Enbridge, but I chose to let it expire because I think that's a pretty low price as it is. And because I only have 10 shares anyway right now, I will wait. Should there be an inevitable market crash, then I will buy it back or buy more of it, I should say, and lower that average price, dollar cost averaging in. Although, like I said, chances are Enbridge is one of those stocks that's going to stay fairly stable, even in the midst of, a crash or a recession, because guess what? Everybody needs energy anyway. But let's go look at, let me close out of here. Hold on one second. So let's go look at ENS, which is, like I said, the fund eSplit Corp that actually tracks Enbridge and buys and sells Enbridge. You can see I've got a lot more money in there. And right now, my price is up by 16%, which is pretty darn good. I only have a total of 130 shares. I put about just under $2,000 in. But let's look at the 52-week high. The 52-week high is 1658. 52-week low is 1302. So my average price, as you can see, is 1366, which is still above the 52-week low, and but not so bad, not so bad at all. And I have some in my RSP and my TFSA. Why? Because of that whopping 9.77% yield. I absolutely love that this fund tracks Enbridge exactly, and so therefore has the exact same chart, but offers a much higher dividend than Enbridge does. So that's kind of cool. And then, I mean, I own both, but I have just decided that I'm going to put most of my money into ENS. Now, here's the challenge with an e-split fund. A split fund is more volatile, or can be more volatile in the marketplace, right? So if there's a big drop, let's look at right here, see that? Then people will liquidate their shares in the fund. You'll see that it'll go up, it'll go down 16, down to 13. Now that's the 1 year. Let's look at the 5 year. So again, we're looking at eSplit Corp, which tracks Enbridge. The 5 year up to 1694, and then that was the big market crash of March 2020 when the pandemic was basically announced and everything locked down. So you can see that it took a couple of days to drop, right? So from February 26th, February 19th, February, March 18th, March 11th, March 18th, you can see how quickly that dropped, but it took still a couple of days before it happened. If there's another market crash, there's no guarantee that that's going to take that many days. It'll probably go down over a couple of days, but look at that low. That low was like $9.51. So that's significantly lower from where I bought it, which means I'm going to make sure that I have a stop limit sell right here, because I do believe that there's a market crash coming. So at some point, and these stop limits, when you set them, they last for about 3 months. So I really like this stock, and it's one of those long-term stocks that I keep in my portfolio, but I personally want to pick it up a little bit cheaper if I can. And that's why I set a stop limit at 13.45, which is basically what I paid for it. It's a Canadian stock, so I'm not losing money on the exchange. Um, if you're putting a stop limit for a US stock, you have to keep in mind the exchange rate and the fees, right? Because on US stocks, you do pay a slight fee of 1.5% plus the exchange rate. So you don't want to lose money on the exchange rate. So be sure that you calculate that in. But stop limit right here. And then you see I have limit buys already set. So I have a limit buy set at 10.50, which is basically $3 less than I paid for it, or will have sold it in both my RSP and TFSA. And I have one set at 11.50 because I think that that's a pretty reasonable price for this stock. But if it goes to 9.50, I'm still going to be a little bit in the red. It won't take long before it bounces back because, again, it's an energy stock. So I'm not really worried. But basically, in my TFSA, I had set a stop limit of 14.35 just because I want to make sure that I don't lose the capital that I put in there. Now, again, these are very, very defensive kind of plays. I don't have hundreds of thousands of dollars invested. I only have a couple grand invested in my various stocks, but it's one of the ways that you can sort of set it and forget it and feel very safe about what you're investing in and feel safer that you're not going to lose your capital. So that's how I use the stop limits and also the rebuys so that I can lower my average price here and still maintain my stocks and still continue to build my portfolio as time goes on. And as you might notice, I don't sell off necessarily all of my shares. I will sell maybe 60% of my shares and just keep averaging down so that I maintain a sort of base level of shares. But there you go. That's how I use stop limits, and also how it gives you a little bit of reassurance, because you can just set it and forget it. You know what your sell price is, you know what your buy back in prices, you know what your buy prices are when you set a limit buy, and you know what your sell prices are, either high or low. You can set a limit sell to sell at, like, let's say 20% profit or 30% profit, or you can set a stop limit sell to make sure that you don't lose your capital in the event of a very market turbulence or a big drop in the market. This is one of the ways that I play in the stock market and maintain my long-term portfolios in my RSP or my TFSA, but I do it in a worry-free kind of manner. People always ask me, aren't you afraid of losing all your money? Isn't it too risky? And my answer is no, I'm not afraid. Because I make sure I'm not going to lose my capital invested. I make sure that I can have some peace of mind. I set it and I forget it. And then I know where I'm buying in and buying out or selling out. And if you haven't started yet, what are you waiting for? Yes, the market can be volatile. Yes, there could be a crash and a recession, but these are huge opportunities that actually help you double, triple your profits. These are huge opportunities that make millionaires and billionaires. I'm probably not going to become a millionaire and billionaire, but I'll tell you what, if I can 2x or 3x or 4x my retirement fund, I'm in. Get started. Just start putting money in every month. Let it sit there. Wait for your price. Put in a limit buy, and watch the market and learn. It's never too late and it's never too early. I wish I had done it sooner. Anyway, happy Friday.